you have any money in the market whatsoever, you need to hear this, because despite the stock market breaking all-time highs, search volume for AI bubble has just broken a new record. Investors believe that the economy is now on borrowed time, and the billionaire Paul Tudor Jones says that this is now reminiscent of exactly what happened right before the 2001 dot-com crash. That's why we really have to talk about exactly what's happening, what could be in store for the future, and why some people could be in for a very rude awakening. Because even though it's easy to think that stocks just keep going up higher and AI is the future, the reality is most people are not prepared if the tides were to eventually turn, when they start to see serious, life-changing losses in their account, where years of profits are wiped away in a matter of weeks. And that is what we have to talk about today, as well as what I believe to be the best strategy going forward. Alright, now let's talk about the dreaded market bubble. Usually this occurs when enthusiasm, excitement, and money all combine at the exact same time to cause one sector to skyrocket in price. And really what we are seeing today is truly incredible. Like, just consider that OpenAI recently raised at a $500 billion valuation. They then commit $300 billion for Oracle Cloud Compute. Oracle skyrockets in price. Because Oracle runs on NVIDIA chips, NVIDIA demand soars, and so NVIDIA invests $100 billion back into OpenAI. But wait, if that sounds like a circular infinite money glitch, it gets even weirder. OpenAI also owns 10% of AMD. Intel will be partnering with AMD as a customer, and the government owns 10% of Intel. Or basically, to dumb this down, it's kind of like Paul investing $100 in John, who invests $100 in Bob, who invests $100 in Paul. And that's where we get into the first problem. Tech now makes up more of the S&P 500 than at the peak of the 2001 dot-com bubble. And NVIDIA, which has the largest weighting from any company in the world, trades at a price-to-earnings ratio of 57, which for reference means that investors are paying 57 times more money than what NVIDIA earns, with the expectation that they could overpay now because earnings will be even higher in the future. And again, that's just the very beginning. We also have a metric called the Buffett indicator, which measures the total value of the stock market against the US GDP, and he's previously referred to it as the single best measure of where valuations stand at any given moment. With this gauge, it's said that a reading of 100% is said to be fair, at 70% stocks are a bargain price, and if it's near 200%, investors are playing with fire. And I think you get where I'm going with this. As you can see here, the Buffett indicator is trading at an above trend price of 217%, which places it at the highest level ever recorded in stock market history. Now, of course, in fairness, these days the Buffett indicator is said to be somewhat flawed because it doesn't take into account how low interest rates affect a company's valuation. But that isn't stopping some experts from warning people that these